Hello, I'm Loda Smits for the Finance News Network, and joining me from Australian property data provider RP Data is Senior Research Analyst Cameron Kusher. Cameron, welcome back to FNN.
Thanks for having me.
RP Data has just released its July Home Value Index results. Were there any surprises?
Well, at a combined capital city level, home values increased by 1.6%, and maybe the strength of that increase was a little bit of a surprise. Again, we're not seeing that growth across the board. We saw increases in Sydney and Melbourne and in Canberra and Darwin, but the other four capital cities all actually recorded falls over the month. So a little bit of a surprise how strong the overall headline figure is, but we're still seeing quite a divergence between each market in terms of how the capital growth performance is going.
And Cameron, clearance rates have also been remaining strong. Where is the demand coming from?
Well, the demand's very strong at the higher end of the market. What we have seen over the last probably 4 to 6 weeks is a bit of a rebound in auction clearance rates. They were starting to ease, but we're seeing a very high level of properties taken to auction at the moment for this time of year. You typically find through the winter months much lower levels of activity in the auction market, but it's very strong this year. Obviously, there's momentum there, and we know that investors are very active in the market at the moment, and obviously a lot of competition, a lot of pent-up demand in both Sydney and Melbourne, and the low interest rates are clearly encouraging buyers out of the woodwork.
Now, Cameron, you mentioned interest rates. Despite interest rates remaining steady for almost 1 year, the housing market continues to remain resilient. Where should investors be looking for value?
Well, from an investor's perspective, we've seen a huge amount of activity in Sydney. The New South Wales housing finance data shows that about 1 in every 2 property purchases is by an investor at the moment. And I think clearly when you look at rental yields, they're extremely low both in Sydney and in Melbourne. So it's a capital growth play that investors are looking for at the moment, not a rental return play. So given that, the best time to invest in Sydney and Melbourne would have been probably 24 months ago. They've probably missed their best opportunity for growth in this phase. So again, I think that's why we may see some investors switching their attention to other markets.
Okay, and which markets would you suggest are looking attractive?
Brisbane's obviously a prime candidate, higher yields, only about 8.5% growth so far this growth phase compared to 25% in Sydney. But you also might find some of the cities adjoining Sydney and Melbourne. So you might see some more activity in Geelong, for example, or Bendigo and Ballarat in Victoria. And in New South Wales, you might start to see more activity in areas like the Wollongong and Newcastle and the Hunter region as people are priced out of the Sydney market, and as those markets start to pick up, looking to ride potential capital growth in the future.
Finally, Cameron, some of Australia's biggest banks have just cut fixed mortgage rates. How does this support your interest rate outlook?
Well, it's an interesting one because a lot of those banks are still calling for interest rate hikes next year. But obviously, if you're going to offer a lower fixed rate mortgage than what we are at the moment, it means that they think that the interest rate environment's going to be quite low for some time. Obviously, funding costs have reduced as well. And probably there's a lot of competition out there in the mortgage market at the moment. These guys are just fighting for some market share at the moment. I don't know how long we'll continue to see those fixed rate mortgage rates at these levels. Probably not too long, but it does suggest that they do think that mortgage rates are going to continue to be fairly low over the next few years.
Cameron Kusher, thank you so much for the update from RP Data.
Thanks for having me.